tell us what's going on, current state of the markets. I know there's all kinds of crazy news out there depending on what channel you watch. So give us the real deal.
Man, I've been on a ton of calls, and because of things changing so quickly, I try to stay on top of things. So I listen to a lot of different analysts from all the different investment management firms. The Fed's not going to stop until they bring this inflation down. I mean, that's pretty much their objective. It's like we're at year over year CPI of about 8. Inflation's running pretty hot. Their goal is 2. And they're going to keep raising rates until they reach a certain point. Now, the terminal Fed rate now is somewhere north of 5, just north of 5. So we've got a little ways to go on that. If they're raising rates now, will they continue to do it at the pace that they have been? There's a good chance that they could slow down, and that's what we're hoping on. But with some parts of the economy still fairly strong, they will probably keep their foot on the gas just a little bit longer. And then once they reach their mark, doesn't mean they'll start bringing it back down. They could sit there for a while. So the risk of a recession right now, and I know that, people out there, we had those 2 negative quarters of GDP already. And, that's doesn't typically mean that there's a recession when you have 2 consecutive quarters of GDP. Some folks had said that. It feels like it sometimes, but we're not quite there. The next quarter, third quarter, was a positive 2.6 GDP. Now, most of that was driven by a reversal of trade deficit. So when you factor in consumption, you factor in investment, you factor in government spending, and then you have the net trade, it comes in at 2.6. Well, 2.8 of that was net trade. So you got to think the other ones accounted for negative 0.2 of those reports. So, there's some, looking under the hood of all these numbers is really where we need to be focusing on, not just the top line number.